Hi guys, welcome back to another video on Bitcoin, and today we're going to be looking at why Satoshi Nakamoto, the purported founder of Bitcoin, capped its total supply at 21 million. Firstly, we know that limiting the supply of Bitcoin has a lot of advantages and is one of the reasons why people think Bitcoin is an evolution over centrally controlled fiat money. Unlimited supply of money leads to several problems such as higher inflation rates, which in turn lead to higher costs of living, unit labor costs, and lower profits for businesses, encouraging capital flight. Corrupt officials in the central bank are also bestowed with too much power over the economy, as many a times central banks, although owned by the government, work independently from a country's ministry or department of finance. Since Bitcoin's value comes from the people believing that the price of the asset is going to go up, it's important that its supply should be limited. Bitcoin's limited supply keeps it scarce, such that it holds its value with relative stability for years to come. This is why Bitcoin is often called digital gold. Limiting its maximum supply and slowing the rate at which new Bitcoins are issued causes each Bitcoin unit, termed as a Satoshi, to appreciate in value over time. But why did Satoshi Nakamoto choose the number 21 million? A story by David Canellis from the Next Web News suggests that Nakamoto had conversed with Mike Hearn, who was a software developer at Google. In 2014, he left Google to help develop Bitcoin. Emails between the two shed light on the mysterious 21 million figure. According to the story, Nakamoto said, "I wanted to pick something that would make prices similar to existing currencies, but without knowing the future, that's very hard. I ended up picking something in the middle." Let's look at some economics to understand Nakamoto's reasoning better. The global fiat currency supply is often categorized into different brackets: M0, M1, M2, and M3. M0 refers to money being actively circulated in the economy. M1 is M0 in addition to money in demand deposit accounts. Demand deposit accounts are essentially accounts, such as your checking account, where you're able to withdraw or demand your money back at any given time. To learn more about these buckets of the global fiat money supply, check out the video I made about that, linked in the description and in the card. Further along the email conversation between Hearn and Nakamoto, they seem to have agreed on the fact that if Bitcoin remains a small niche, it'll be worth less per unit than existing currencies. If you imagine it being used for some fraction of world commerce, then there's only going to be 21 million coins for the whole world, so it'll be worth much more per unit. Although these emails show what Nakamoto was intending, it does not shed light on why he chose the arbitrary figure of 21 million. Instead, we have to hypothesize based on Bitcoin's distribution model. In Stack Exchange's Bitcoin forum, they seem to have cracked the reasoning using mathematics. We first have to familiarize ourselves with the two tenets of the fundamental design of Bitcoin. Firstly, Nakamoto decided that Bitcoin should add new blocks to its blockchain in about every 10 minutes. 10 minutes was specifically chosen by Satoshi because after a block is mined, it takes time for other miners to find out about it because of network lag. And until then, they're actually competing and mining, aka solving complex algorithms, to add the new block instead of moving on to the next block. If someone mines another new block based on the old blockchain, the network can only accept one of the two, and all the work that went into the other block gets wasted. Lengthening the time period between the blocks reduces this waste. At the same time, too long of a transaction period leads to Bitcoin not being able to efficiently act as an exchange of value. I've made another video covering this topic in depth, and that'll be in the description below and in the cards above. The second tenet Nakamoto decided was that the reward miners received, which started with 50 Bitcoin, halves every 4 years. This is to ensure that the supply of Bitcoin lasts longer and the slower release rate creates scarcity, allowing the price to appreciate more. So let's get into the math now. If we assume that there is one new block added to the blockchain every 10 minutes, 6 blocks are added every hour. Since there are only 24 hours in a day, it means 144 blocks are mined every single day. There are 365 days in a year, and thus 52,560 blocks are mined every year. The miner's reward halves every 4 years, so every 4 years, 210,240 blocks are added to the blockchain. This can be estimated and rounded down to about 210,000. Now, if we add up all the blockchain reward amount, it equates to 100 Bitcoin. If we now multiply the sum of the reward sizes per block and the total number of blocks, we get 21 million Bitcoin. Although this mathematical explanation seems valid and we do get the magical 21 million number, it does not actually answer why that specific number was chosen. This explanation only explains why, based on the rules Nakamoto set, how only 21 million Bitcoins can be produced. The real answer to why he made sure only a specific 21 million Bitcoin can be produced lies in why he chose those rules as specific parameters for Bitcoin. Another user on the Stack Exchange forum seems to believe that since Bitcoin is likened to gold by Nakamoto himself, the value of 21 came from the fact that if we place all the gold mined since humans started mining it in the 1950s in a cube, each side would have a length of about roughly 21 meters. In conclusion, we need to understand that the exact amount of 21 million is not as important as some make it out to be. What's more important is that Bitcoin has a limited supply, which distinguishes itself from a centrally controlled fiat money. And this is one of the reasons why some people believe it's the currency of the future. But if you want to really understand why people believe in Bitcoin, check out the video I made, Why People Believe in Bitcoin, linked in the cards and in the description below. So thanks for watching, and I hope you check out the other videos I've made on cryptocurrencies.